Market conditions majority bullish, 13 and 1, ticking back to that 13. We were at 14 yesterday. We were at 12 the day before, as we've had a little bit of volatility at the upper end of this range, pulling back into this demand block around that 6,200 range. S&P futures relatively flat this morning, and we're seeing S&P close out yesterday 13 and 1 as well. The area to be aware of is watch to see if we do retrace and pull back. If we pull back and break through this 6,200 range, next stop more than likely is going to be that 6,051, the 236 location, or the upper end of that demand block, and that could kind of be the magnet that the market is gravitating towards, especially if we can't hold this range right here, where you can see that green bar. If we can't push up through that or even test some of those upper highs, when we start to flatten and compress at the upper end of the trend, we could get some retracement, follow through retracement from these levels where we already are expanded towards the upside. We're seeing breadth continue to weaken or stay relatively weak at 53% of the S&P 500 stocks above 50-day moving average. So you're getting, a lot of stocks that are starting to roll over and starting to trend lower. You've got majority bearish on that indicator, as well as the weekly time frame as well. So some softness internally in the S&P 500. We're seeing VIX, that volatility range, popped up to 20 the other day, pulled back now to that 17 range. We're majority bearish here as well. We'll see if that holds. This indicator is just this real sharp up and down indicator. So when you're getting fear in the market, you're getting these spikes in VIX. When you're getting a lot of complacency or lack of fear, you're getting a really lighter VIX down around that 15 number. We're starting to see that elevated here a little bit as well. So you're getting some activity, you're getting some movement starting to take place at the expansion range of this current market trend. We're seeing the Dow Jones Industrial Average repelled by the supply block right here. That 450 range is not holding, starting to pull back down. We'll see if it retests or tests that breakout zone from here in that 236 location. And if so, that actually would be a good range for some additional demand to be coming back in and prove that the demand is there, prove that this uptrend can sustain itself with a little bit deeper retracement, or at least a mild retracement, pulling back to the 236 location, which is going to be right here on S&P, and a little bit sooner on the Dow. We're getting to that point, or getting close to that point. So counter trending now off of this last little move higher back into the supply location. Supply meaning it's red, obviously, because that's where sellers have been at before and pushed the market to the downside, and now we're testing that zone. We're testing that area to see if buyers can push through or not. I'm going to snap to this trend, but we're getting some weakness on the Dow. Triple Qs had pressed to all-time highs, just like the S&P 500. We're getting 13 and 1 on the triple Q's location. Let's see if we do pull back. Again, that's upper end of this green demand block, 533 for the 236 on tech names. The Russell 2000, your small cap names, really weak during this entire trend process as well. It did find support at the 236. You can see some bouncing right here, demand coming back in at this location. We'll see if that pushes us any higher, and if we are going to get some demand coming back in at these levels, or if it's going to start softening and retesting that area. The next few days are going to probably be pretty telling. USO continuing its weakness and volatility, majority bullish at 10 and 4, pulling back, has broken momentum back into the corrective zone. We'll see if if this area where it had started to move from finds additional demand. We're now in the corrective zone, 382-50618. Anywhere inside of this range could be demand areas where you get buyers stepping in to push things higher, but it's been really, really choppy and sloppy for a long time in oil. Gold, on the other hand, has had this really smooth, consistent uptrend, and is continuing in that vein here. We've got 300 at 236, currently looking at around that 310 to 309 range. The majority bullish, upper end of that trend compressing. Ideally, you get even more compression without it being price volatility to the downside. There's still there's not really demand, but there's obviously not a lot of supply here either. Nobody's selling gold yet, even though we're pretty expanded. That could add into the case of caution. Okay, that there are lots of investors looking for some caution still by owning gold. The dollar showing some strength here, pulling back the last couple of days as well. You can see the overall trend was pretty expanded to the downside. Not surprising to see it pausing a little bit right here after a pretty a pretty robust downtrend. SLV silver showing some strength here at the 236, bouncing at this low, moving back up into momentum, compressed towards the upper end of that trend. All of these commodities getting pretty expanded towards the upper end of the range. We're seeing the 2-year note after that big sell-off the other day, really not doing a whole lot, just consolidation inside of a pretty tight range around that 373 range. 10-year, we're also seeing 423, and same story right there. A pretty big sell-off based on some weak economic numbers. Haven't really had any big catalysts since then, and it's just been relatively quiet for the 10-year. A couple stocks to consider: symbol J, Jacob Solution, in the data processing service space, seeing it gap lower, find some support at 236, and then rallying to create a new high. So interesting demand structure there for symbol J. Also looking at TDW in the marine shipping area, getting a big confirmation bar here above 236, big volume for potential momentum continuation on TDW. That'll do it for today's update. Everyone have a fantastic day today.